Hey everyone, this is Trinisha Marie, owner of TMarieInnovations, which is a business development and credit consultant company. I have been receiving a lot of questions from clients. Well, what is the difference between an LLC and a corporation? So this is what this video is about. I'm going to teach you the difference between the two. And I'm also going to give you the advantages and disadvantages between the two so then you feel comfortable enough to figure out which one you should file for based off the information that I'm going to give you. An LLC and a corporation. The difference between the two is that an LLC is owned by either one individual or more individuals based off of percentages. Meaning, if you're just one person who owns that business under an LLC, you are 100% owner. Let's say there's three. Okay, so you have one person who's your main owner, and then you got two people who own it as well, but maybe their percentages are smaller. So you have maybe 50% for one person, 25 for the other, and 25 for the other. So it works that way. Even two owners, maybe they just share ownership. Maybe one has more of a higher percentage than the other one. Maybe the other one is like background. So they're able to work in the back, have a small percentage of ownership, while the other person is able to handle more extreme or be the voice of the company or handle things mainly more like a salesperson. For a corporation, it's completely different. Corporation is not owned by the person who opened the company. The corporation is actually owned by shareholders. So if you don't know what that means, let's take Principal. Principal is a known company geographically. They handle insurance. People are able to purchase stocks. The stocks are owned by individuals who want to put money up into that company. They are known as the shareholders. People who hold insurance, they are the shareholders of that company. They now own part of that company. Another prime example is credit unions. Credit unions, when you open up maybe checking, savings account, they will ask you to put down a certain amount. My credit union that I go through, theirs is $25 minimum to put down. That $25 is you owning part of that credit union. You are now part owner of that credit union. That is considered you are the shareholder. I did not have to purchase stock in order to be part of this. It's just me being a member and paying that $25 due in order to be part owner of that. So I can get into the difference between credit unions and banks, but I can do that in a later video. If you want me to, comment down below. Let me know if that's another video you want me to do, banks versus credit unions. But that is a difference between LLC and corporations. So let's dive in more into the aspects of, I need to know disadvantages, I need to know the advantages, I need to know what am I going to get myself involved with if I were to get an LLC or if I were to get a corporation. Let's go ahead and start with corporation. So I want to get involved with the advantages, your pros. So of course, the pros of it is that your shareholders have limited liability. They are able to invest whatever they want to invest, but it's very limited. That also means that just because you know they are a shareholder of the company, you are stopped at a specific amount that you are able to invest into my company. You have a top, meaning you are not able to invest more than $5,000 nationwide. Principal, Wells Fargo. You can be a shareholder within those companies, but you are only limited to invest a specific amount. Another advantage of it is that you have more of an availability when it comes down to capital, meaning that you being stationed as a corporation, you are able to end up applying for capital and retrieving it way easier than someone who owns an LLC. The difference between the two is that with a corporation, you are more defined as a large business. With an LLC, you are basically defined as a small business because it's one person owning it, or however many you choose to have own that particular business. Corporation, shareholders. So you have more of a chance getting approved for capital being corporation because they're trying to please your shareholders. Okay. Another one, existence with a corporation. If the CEO, the president, or one of the branch managers were to pass on, they have others that were underneath that person within the board that is able to come on and tack on that responsibilities and now hold that title. So with Wells Fargo, when their president stepped down, it was the person underneath that took over, or someone amongst that board of executives that was able to take over that responsibility so that Wells Fargo can continue on as a corporation company. Another one is Fidelity. Fidelity is also another insurance company or an investment company. And they had someone off of their executive board drop, and someone who was underneath that person, like a department manager, was able to get in and be a part of that branch of executives. Companies like that of a larger scale, they have branches of different things. They have a branch that handles international. They have a branch that handles nothing but financials. They have a branch that handles HR. And then, of course, you have your HR manager, and then you have those underneath the HR manager that's able to do hiring, jobs, all that good jazz. Like each branch has other branches leveling off of them, but each branch holds a person that is supposed to see everything, your board of executives. Is ownership transfer? Just like I stated earlier, that someone is able to go ahead and place themselves part of the board of executives if someone were to leave or if someone were to pass on. Ownership transfer is another one that's pretty easy to do. If a person no longer wants to be a part of the company, let's just go back to Fidelity. When that person of the board left, they are able to transfer their title to another person. Or let's just say principal's president drops. They're able to transfer their ownership, transfer their title to another person who could be listed as president, who has the same qualifications or more to uphold that title. And another pro is credibility. So, what do I mean by that? Because people who hold LLCs can also build credibility. It is easy to do so. Corporations, like I said earlier in conversation, they are considered a large company because of the fact that they have shareholders. So they have an easy capability to build more of a credibility and get known out there. Just like you know about all these insurance companies, but you don't know that there's other insurance companies that don't have that credibility, but maybe credit unions know them. Or maybe small known banks, local banks would know about these particular insurance companies. And the only way you know about them is if they were to mention it, or if you see an advertisement, or if something is mailed off to you, then you'll start seeing them. But those that are well known, like Nationwide, Principal, Wells Fargo, Fidelity, they have a wide range of credibility. And that means that they have creditors invested with them, lenders that have invested with them, customers, because I used to work at other insurance companies. And when I tell you, you had customers coming from all over the map. You had customers come from other insurance companies because of the credibility. they see something major, or if they see, oh my God, you were rated A or you were rated top 10, so I want to put my money into y'all and see how that happens. That's where credibility falls in. And that also goes upon reviews, of course. But it's all about money at the end of the day. Who holds more money? Who has more satisfactory? And that would be those type of corporations. So now that we have that out of the way, let's talk about the disadvantages, because I know you're sitting there and you're like, well, dang, that sounds pretty good. I should go ahead and do a corporation. However, you need to see the other lens too, your disadvantages. Let's start off with it. So your disadvantage, number one, the process. The process can give you a headache. I'm telling you this. Setting up a corporation through your state is a long process, and it has more paperwork included that you would have to do in order to set up a corporation. Like with an LLC, it doesn't take much time. You have like either one form, or maybe you're able to do it online, which only takes seconds, and you're able to get approval or denial. With a corporation, not only do you have to submit ownership paperwork, like who is the one who's setting this up, who all is underneath, but you have to have your board of executives. You also have what type of branches are you going to have in amongst of your company. Who's all going to be a part of that? How is this going to flow? Like your paperwork is going to be the gist of a large business plan. Normally, business plans will only have about a few pages. Some can get by with 10 pages. Other companies can maybe get by with 3. But think of it as a major business financial plan. You are showing how everything is going to take place, how everything is going to exist, and this is based off of your corporation, and the timing of it for you to get approved to even be a corporation is much longer than being approved for an LLC. Another one, taxes. You are going to get double taxation, meaning you have a corporation tax, and then you also have what's known as a dividend tax. Those are 2 different things that you're going to be looking at when you file your taxes as a corporation. When it comes down to a smaller business with an LLC, you can do what's known as a Schedule C. And your taxes would be done while you're also doing your individual taxes. With a corporation, you have to separate the two. So not only would you have to do your own individual taxes, but you also have to do your corporation taxes. And that's why it's a double taxation process when you're doing your taxes, because of those factors, dividends and corporation taxes. Next, of course, is a conflict of interest. Your executives, your board of directors, they have what's known as a personal interest within the company. It's a conflict. When I say personal interest, they make it more of themselves or what can happen to themselves versus what happens financially, more that happens business. So it's more like they're too busy coming in and trying to tie personal ties with business ties. And it also becomes a conflict going back to taxes because of the fact that, with an LLC, you're not really head responsible for anything that were to happen within the business itself. The reason why the board of directors or executives take more of a personal interest within the company is because with taxes, they are held responsible. If anything happens financially, it comes back on them as a board. So that's something to look into as well. Do you want to be held financially responsible, or do you want the business to be held financially responsible? Confidentiality. We have seen big corporations fall into hacking. One of those reasons is because either one, you've had people come in and out the door, and people know what goes on the inside, and they're able to tell it on the outside. Okay? Not only that, but your financial records as a business, as a corporation, are available publicly. And I say that because just Google one of these big insurance companies, Google one of these well-invested companies, and then also type in their financial records of whatever year. Literally, a document of 100 pages or more is going to come up and it's going to show you how they did each quarter. It's going to show you where they fall as far as financial. It's going to show you where they've gained. It's going to show you capital. It's going to show you who bought out that company, who is trying to raise capital, who fell out the company. Like, everything is exposed on the web when it comes down to corporations. And then it's like, if anything were to happen within the company, media gets involved. Well, bad press can be good press. Okay, but what if you're leading towards bankruptcy? What does that say about you as a corporation? It means you guys can't handle your financials, and I'm a shareholder into your company, which means my financials, I'm looking to gain money for generations after me, but you guys are messing up the process of my financials because I'm seeing that you guys have filed bankruptcy. And I also want to mention that another disadvantage is because you have all of these extensive rules. You know, as a business owner, I do have rules, and I want my company to go a specific way. So I handle everything. Do I wish I had help? Of course. But I also have really high anxiety, and I overanalyze a lot. And the reason why I overanalyze is because I want to make sure everything is perfect or to a T that, would help me help you. So if I feel as though there is something wrong, I have to immediately fix it, because if I can see that, then I feel as though someone else can see that. With corporations, it's kind of the same way, but you have to follow state laws, you have to follow federal laws, you have to follow city requirements. If you do not follow specific things in order for your corporation to hold, you're going to have numerous penalties across the board. You can city, state, federal. And federal, you do not want to mess with. So you literally have to follow those guidelines. Whatever is required federally, make sure you follow to a T, and then move on to the next. Follow state, follow city. County is even in there as well, because different counties have different rules, different playbooks. So you have to make sure everything goes according to plan and make sure your corporation is 100%. Okay, so now that we got that out of the way as far as a corporation is concerned, let's go ahead and move to an LLC. Me, for experience, I hold an LLC. TMarieInnovations is an LLC, one owner. That is me. I handle everything. And I'm also able to come up with anything that I want. I don't have to worry about going to a board of executives, board of directors in order to make those changes financially, with taxes. The business will hold responsibility. My personal assets will not hold any type of personal, any type of tax problems that may happen within a business. My assets are separated from business assets. So let's go to the advantages. Like I stated, an LLC will protect those who own the company and protect individual assets from any type of liability that the business holds. Next, of course, I talked earlier when dealing with corporations, taxes. So what about taxes? Like I said earlier, when you do file your taxes, having an LLC, you're able to file as a Schedule C under you as an individual. When you file your taxes, you do not have to worry about corporation taxes, and you definitely don't have to worry about dividend taxes. You just have to go with what is needed and required as far as small business, as far as an LLC, and work that way. No double taxation. LLC is simple. You do not have to worry about so many legalities, so many legal requirements when you develop your LLC. All you have to do is just file what is required through your state, and then you can get approval or denial. And then there's some states that require a certificate of compliance or a certificate of information. California is being one of those. That's just an extra fee that you would have to pay, and you would have that on your file. It all depends on what state you live in and what is required. Here in Iowa, you just need to file your LLC document and you can get approval just like that. But of course, with every state, you have to make sure the name is not taken that you want to use for your business. And if it is, you got to go back to the drawing board and figure out what else you want to name your company. Make sure it's not taken, and then pursue to do your paperwork for an LLC. And of course, when it comes down to an LLC, the people who own the LLC are the ones that control it, not the shareholders. So me being just 100% owner, if I had someone to tack on whatever their percentage is, just like we discussed earlier, and whatever they handle, that's what they control in order for the business to succeed. Well, let's talk about disadvantages of an LLC. A corporation, their advantage, they're able to raise capital. They're able to get capital. An LLC is far more difficult to get capital. However, you have something called business credit, which I will make a separate video for that as well. If you haven't already, my book is out on Amazon, Building Business Credit for Small Businesses. It actually goes into full detail of how that works. So even though corporations are able to get capital and it's easy access for them, LLCs have a tough time getting capital. We actually have to prove our worth in order to get capital, angel investors, things like that. But when it comes down to business credit, if we were to able to build business credit from tier 1 on up, it's easier for us to do that, and we are approved quickly based off whatever tier that we're trying to get. So if you already have a tier 1 and a tier 2, it's much easier for you to obtain a tier 3 and so on. But if you're only concentrating on tier 1 and then trying to move to a tier 4 for business credit, it's going to be a lot harder. So you have to go within the initial steps in order to build business credit that you could later on use to generate capital. But it takes time and it takes patience, where corporations, they already have that access to it automatically. And sometimes that could be a downfall for a business because that's where financial problems happen and it's hard to get out of that debt. And then, of course, that's when you start seeing bankruptcy or closures. Another disadvantage, of course, for an LLC is confusion amongst states. Me being a business owner, part of it is developing businesses. And part of developing businesses, we have to start from the ground. I help clients build their businesses from that ground, meaning registering an LLC or even a 501c3. LLCs is my main thing. I do help with 501c3s. When a client comes to me and they live in a whole total different state from where I reside in Iowa, I do my research. Oh, you live in California? It's a whole total different ball game because you already know as a business owner, wherever you are located, whatever state, me being in Iowa, I know the rules here in Iowa when it comes down to structure of an LLC. California, I don't reside there, so I wouldn't know the structure of an LLC. That's where your research comes into play. So not only do you have to figure out, well, can I do it online or does it have to be paper? If it's a paper document, what is all required? If you do it online, they have everything to a T online that you are able to put on there. And then it also means, well, after I get the LLC, what else do I have to submit? But like I said earlier in conversation, like California has something called Certificate of Information. It's another fee that you have to place on board, but it shows credibility within the LLC that they have this. What we have in Iowa is called a biennial report. A biennial report, we have to pay, I believe it's $50 to $60 every 2 years. Some states like Texas is every year. California is also every year. That's where that statement of information comes into play. The reason why you have those extra fines to pay on a yearly or bi-yearly basis is because they want to make sure that your LLC is still intact. Are you still a company? They want to make sure you're still a company, and they can keep that on their sites that you are still an open, active company. That is the reason for that. So again, if you are trying to go into business and part of your business is to build LLCs, please make sure you go based off of that state and not based off the state you reside. There's different rules and regulations to every state that you have to follow when you're trying to build a business. Me being that, I do what I need to do, and I'm able to conduct business with my clients and giving them the full blow by blow as far as what is needed. And each state filing an LLC has a different fine. Here in Iowa, you have to pay $50 in order to register your LLC. Other states have different fines. I also want to provide this information as far as a disadvantage. You have no perpetual existence when you have an LLC. I'll just use me since I'm 100% owner. If I were to die tomorrow, the company leaves too. So now that you know the difference between an LLC and a corporation, now it's up to you to decide which one you want to do, LLC, or if you want to be a corporation. Me, I chose the LLC route, and I'm very happy. 4 years strong and counting. 5th year is in January, so I'm definitely blessed to see my business grow as much as it has. You're able to get credibility anywhere. Social media is one of the biggest factors for credibility. So make sure, however you do it, corporation or LLC, make sure you also use social media as one of the biggest platforms for your company. Word of mouth is still there. Local advertisement, it's still there. The social media, you're able to get around. And the name of your company, the shares, the groups that you're able to get in to promote, use it as an advantage for your company. So I hope you guys enjoyed this teaching moment for you all. Comment down below. What else would you like to see? What more do you want to see? Do you want to see another versus video? Do you want more information in something else, a different topic that has to do with business? Let me know. I will definitely look at your comments. I will reply. And you may even see that video with your name shouted because you're the one who came up with the topic. So let me know. Make sure you like this video, share with everybody else, and subscribe to my channel. I am Tanisha Marie, and this is Team Marie Innovations. Have a great day.